Hi, everybody. I am back to do my next market review. Um, I'm going to go ahead and kind of section off this part of the chart. So when I came to the chart at around 10:30 this morning, this is what I saw, and the major supply zone being here, and the major demand zone being here. The Actually, it looks like I actually came a little bit early. I came before this candle, so it may have been 10:15 when I actually came to the chart to draw the major supply zone and the major demand zone. Now, I got an alarm at the major demand zone. I was not feeling the idea of trading off of this demand zone, I have to admit. And because of my bias, I guess you can call it bias, I didn't like all this choppiness. I really didn't. I didn't like how this how this looked. But if we want to evaluate this objectively, which is what I did after it was all over, we'll say this. Okay, it came and it hit the major demand zone, right? And what you have here is a zone reversal, confirmation, and entry. Now, I'm already looking at VWAP in a wary way because it's VWAP and it tends to make prices turn around. However, if you look at the day, price has gone through VWAP several times. Um, Now, on this 5 minute candle, it did not close below VWAP on the 5 minute, but it did again. So you got it closing above, closing below, closing above, not quite closing below, but now closing below. So the next thing that you would imagine that it's going to do above do at VWAP is eventually close above. I say eventually, and I'm still happy that I did not take this trade. But if I was evaluating this with that in mind, I would say, well, you're trading off the bottom. This is the most recent top. So we make that orange and we say, okay, what's in between it? Well, we got VWAP, but we've already determined that VWAP is not likely to be a factor, although VWAP is always scary. So the next area between here is this kind of small agreement here. Now, we haven't really been able to determine the role of this area. So right now, I'm calling that take profit one. So if we're calling that take profit one and we're trading off of this level, this is at 578, which would make which is more than 30 cents from the zone, making the front of the zone, sorry, more than 30 cents from the front of the zone, which makes the back of the zone. It's more than 30 cents past from the back of the zone. And even if it wasn't, so at an entry up here at around 585.76, you're looking at 40 cents away from the zone. So I would make my stop loss here. And it coincides because it's further than the base of the agreement between the zone candle and the reversal candle. All right, so if we're trading from here, and this is um our take profit, then you're getting good odds that it's gonna you're getting good enough odds for a trade. I'll say it that way. That's That's more than a 1-to-1 risk to reward ratio. And this hit take profit at about in about 3.5 minutes, something like that. Take profit would have been here because it bounced around the way it did, getting out here. So I'm not sure what the profit would have been there, but that would have been it would have been something. 85 cents to 24. So 585 to 85, 585.85 to 586.24 is a pretty good profit. So you're talking probably 17 to 18 cents on a SPY value, depending on where you enter. So that was a trade I missed. And if you look at the rest of the day, it just went up. You already saw the whole chart. Obviously, I had no idea if it was going to go up the way it did, but that whole trade occurred in this little tiny area of the chart. Now, you would think that, well, it's going up like this, you got in somewhere to call. No, I got to trade off of criteria, right? So I've got to trade when the price goes and closes above the zone on the 5 minute. Did that here, never came back. It did that here, never came back. It did that here, then came back and went below. This, let me, uh, let me highlight that. This is where I did take a trade, I think. Yes, this is where I did take a trade. I will explain that in the next video. But just a few highlights. This is where I entered, and then the exit was down here. The idea was for it to go further than that, but I'll explain that more in the explanation video. So once again, the price went up. We're looking. Let's get this hour zone back out. So you're looking for price to close above the zone, which happened here. Now it did come back to tap it, but this area right here, if you're looking at, taking a call off the top, even though yeah, it's been going up all day. If I had taken a call there, then if you look down here at this side, this would have been my take profit. So if this is my take profit, let me go ahead and put a line there. And this is from a while ago, but it's an inflection point. It's an area where I didn't do that quite. This is the area. This is an inflection point. The buyers tried to take control, and the sellers took it back. So that's an area where price can turn around pretty easily. And I'm right up against that area at this entry candle. This will be zone, reversal, confirmation, entry. Well, where am I going? I guess I could expect it to go up because it's been doing that all day. But this is where I've often gotten myself in trouble, thinking that it's going to go up just because it's been going up. I am not doing that anymore. Um, I think after this point, I had other things to do, work and all, and plus I was starting to get a little bit of FOMO from all of the price action that I've not been able to take advantage of. So let's see what would have happened had I been still in the market. So this comes down. You got a tap of the previous zone. This will be zone reversal. Some people will consider this confirmation entry. So that could have been a could have been a trade, I wouldn't have taken it. Okay, so if you got in the entry as it passed this quote unquote confirmation candle, then you got odds and you got quality. So you got those things going for you. But I'm definitely not trying to take a trade that's that close to the supply zone because supply zones tend to make prices go down. I don't care if it's an uptrend or not. I'm not risking that. All right. So yeah. So at this point, uh maybe this trade, but not likely this trade because of how the how the price approached the zone. But it never came back to the major demand zone. And I'm not trading off of I'm not trading off of uh major prior major demand zones that are not the first prior. So first prior I will call or first minor I'm gonna call the first zone that you hit after you hit the after the major supply zone. After the major zone is the first minor zone, right? If this had formed another demand zone, then this will be first minor, right? I only trade off of major or first minor, mostly major. So that was the it for my market analysis. Not sure if it helped anybody, but it definitely helps me. Have a good day. Oh, and if you want to check out my trade, check out the link.